when I came to the United States, what was shocking for me is how I was on the East Coast in a smaller community, and I found it very pleasant that people were walking on the street and they were saying, "Hi, how are you?" to everyone, even though they didn't know you, which in Moldova didn't happen. Everybody's, with a serious face and thinking about their day. If you don't know that person, you don't say hi or how are you. But here, everywhere you go, people say hi, how are you? So it's so simple, but at the same time, so special and different. And I like that because I felt welcomed. Um, and then, of course, I love how United States is so multicultural, and then that's very different than in Moldova because in Moldova it's rarely that you find other nationalities on the street. Maybe more now, but I loved having friends from different countries. So that's another difference. Hi everyone, welcome to the Money Skills Kids Should Have webinar. My name is Elena Panco. I'm a financial professional working in the finance industry for over 3 years. I'm really happy to be here and help you learn a little bit about banks and credit cards, debit cards, and we also have a budgeting game at the end of the webinar. So, as Maddie introduced me earlier, I was born in Republica Moldova, which is a tiny country in Eastern Europe. So, good job, Grace, on knowing that. It's neighbored by Ukraine and Romania, and we speak Romanian. So, I was born and grew up in Moldova. Then, 7 years ago, I decided to pursue my dreams in the United States. I came to San Francisco with a studying program from Moldova, and I went to City College first. I studied there for 2 years. And while I was studying at City College, I also started my job experience in finance because at that time I already knew I wanted to go into finance, and I started my job at Bank of America. So here I worked as a bank teller. So usually the bank teller is the person who helps clients with making deposits, making credit cards payment, opening accounts. So I was helping clients with that and also answering any financial concerns that they may have. And then while I was, so after City College, I transferred to San Francisco State. I studied there for 2 more years and graduated in 2020. So I graduated during the pandemic. No graduation ceremony, but was still super excited that I graduated. And then in 2019, I also interned at First Republic Bank. I was working in the loan department. And that was only a short summer internship, but was very fulfilling, and I have learned a lot. And at the beginning of this year, I started my journey at Baker Avenue Wealth Management. It's a job that I love. I started really pursuing my passion of financial planning. So what wealth management is imagine you have $100,000 and you are too busy with your life, but you want your money to be managed responsibly and in a way that aligns with your long-term goals. So here we come to help our clients manage their finances, whether they want to put money aside for retirement or plan for their kids going to college or just any, and also help them invest. So that's enough about me. So our first goal today is just understand how banks works. And in your own words, how do you understand what a bank is? Right. So people at the register, it's like similar to the job that I did, taking money from the clients and depositing into their bank accounts. So as you go into the bank, so what is their role? You place your money into a savings account, right? You give the money to the bank. Then the bank, and why people give money to the banks? Because they trust the bank is going to safeguard their hard-earned money, right? And have them into a savings account so they can save, instead of holding your money under the pillow. You'd rather have them somewhere safe. Then the bank uses those money that you deposited and lends the money to businesses and other people, right? The bank also wants to, you understand why the bank decides to do that. Afterwards, so they got the money, they lend the money to the businesses and other people, and these people and businesses pay the bank interest for borrowing the money. In other words, the bank doesn't just give someone money for free. You have to pay if you borrow from the bank. So the bank take this interest, right? And they earn interest from the bank. Then so the bank takes the interest and gives you a little bit as a depositor, right? Because you provided this money for them in the first place. So it gives you a little reward for that. And the remainder is kept in the bank as a profit. So the whole flow, the purpose of the entire flow is mostly to keep your money safe. And also the purpose of the bank is to make money on the money. They provide loans, which in the end helps the society because people buy homes and they need a loan. People buy cars and they need a loan. They make purchases with credit cards and debit cards as well. So before I move on, do you have any questions on the flow chart?
I have a question.
Sure, Grace.
About the flow chart.
Yes.
So does it run out, or do they do make another one?
You mean like another?
Or is it unlimited amount of pages?
Do you mean like a limited amount of money?
Yeah.
You can put in the bank as much money as you have, or as little as you have. And the bank doesn't make a difference between an account with $3 or an account with 50,000. All the money in the bank are used for circulation, are used for this flow. Because the bank doesn't make a difference. Did I answer your question?
Yes.
Okay. So as I was mentioning before,
I also
yes.
Sorry to interrupt. I also have another question. So if you want to deposit, or if you want to keep some money in the bank, like you're storing something in a safe, then would that money, just to clarify, that would also be lended to businesses and other people, and then would you still be able to have your money when you deposit it into the bank?
Very great question. Yes, okay. So if you go into the bank and deposit money into a safe deposit box, right? Your money is also kept safe, but those money don't circulate. Because when you lock the money into a safe deposit box, you lock it with your physical key and the bank doesn't have access to it. This is, when I worked in the bank, I saw people depositing money into the safe deposit box, which is your choice. But you have to remember that your money are not circulating in the society, and you also don't earn interest from holding the money into the bank. It's, you put $1 today, you have $1 tomorrow. But if you put the money into let's say a savings account that pays you interest, you may have $1.02 tomorrow, and the money keeps growing and growing, right? But if you keep them into a safety deposit box, no, the bank can't use them for lending because you technically didn't make them available to the bank. Good. Is that clear?
So, if you're basically if you're placing your money in a savings account, then you could get more or less, and then if you're placing your money in safe, then the bank has no access to, and you get to keep all the money.
Yes, you get
no
to
changes made.
Right. You get to keep them in both instances. The main difference is that if you keep them into a safe deposit box, you don't earn any rewards because the bank likes to reward the clients for making money available for this flow chart, right? You get your interest. you get a reward. Okay, you give us your money. We want to thank you, and we give you an interest, right? We pay you interest, which is, I won't go into the details, but let's say for illustration purposes, it's 1 cent every day, just because you made this money available to the bank. But if you keep them into the safety deposit box, there's no reward. Whatever you put in the box, that's what you get at the end whenever you want to access it. Yeah. Okay. So as I mentioned earlier, you would deposit your money either into a checking account or savings account. So usually people differentiate between checking and savings. Checking account is an account that you place your money that are designated specifically for spending. You need to buy a coffee, you need to pay your bills, you need to, I don't know, go to the store and get some candy. All goes from the checking account. The savings account, it's for the purpose of saving, putting money aside. So whenever there is a checking account, the bank gives you a debit card. I'm sure you saw a debit card. For you to make it easier. So instead of going to the bank and asking, can I have $5 to spend here or there? You have the debit card available to you and you can just swipe it whenever you're ready to make a purchase. So debit versus credit, what's the main difference? So, I know we, at the last time when we met, we talked a little bit about credit card and credit score, but just as a review, have you seen a debit and credit cards in real life, and do you know the difference between them?
I'm not sure if I've seen them in real life, but I think the difference between both of them is debit is it's like if you're spending your money on something that directly goes to bank, and you're definitely like it affects your credit. And then for credit, basically like if you're like buying something or purchasing something, then you so like the money doesn't like change like suddenly, just like after 1 month like the changes take place.
Mm-hmm. Yes, so you're right on that when you spend money with a debit card, the money comes right away from your checking account. But when you spend money with your credit card, it's like borrowing money from the bank. You don't spend from your own money, you spend from the money that the bank lends you. So let's go at the first point. What's your preference? So at the end, I will ask you again, what's your preference? Paying with a debit card is like spending cash, right? So either you have your cash that you went to the bank and you said, can I please have $40 in cash from my checking account? And you're given $40. Or you can save yourself this trip and instead swipe the debit card at the store for $40 when you want to pay for your groceries, for example, right? So you pay with a debit card. With the credit card, paying with credit card is like borrowing money. You have the option to pay your balance over time with interest, right? So the bank gave you, okay, I think you're a good borrower, so we trust you with $200 a month that you have available to borrow. You take the credit card and you borrow from it, let's say $30. You have the opportunity, to pay right away, or you can pay, with time next month, or you can pay a little bit, in tranches, right? So how much can you spend? You can spend from your debit card only the amount that is available in your account. And do you know why that is? Why can we spend only the amount that is in our account? Remember how I was mentioning at the beginning? You open your checking account at the bank, you give the bank $500. This is the maximum you have to spend with your debit card, right? So that's why you can only spend the amount that is in your account. If you have cash, $40 in your wallet, that's how much you can spend. If you have $40 in your checking account, this is how much you can spend with your debit card. Whereas with the credit, you can spend up to the credit limit. And you may ask, who sets this limit for me? And it's actually the bank. If the bank thinks that you are responsible with your money, You make good choices. You don't spend more than you have. And if you borrow, you pay the money back to the bank in time. They give you a high limit. If you are just starting to borrow, or if you are not very good with your money, the bank limits your limit. Limits your credit limit, right? So you can spend up to your credit limit. Any questions on this slide?
So, I think you mentioned that if banks trust you, then like they could give you like the limit of $200 to spend a month. But so I heard the term insufficient credit history, and what does like do you know like what that term means?
Yes, insufficient credit history is when you are, let's say, 18 and you want to buy a car because you think you're 18, I'm able to buy a car, taking that you already have your driving license. You go to the bank and say, hey bank, can you please lend me $20,000 because I want to buy this new car? And the bank says, I'm sorry, but unfortunately you have insufficient credit history. You don't have enough history of borrowing money from the bank that proves that you're a good borrower, right? You have to show proof to the bank that, look, I borrowed money on this credit card and I paid it in time. Or let's say adults, right? When adults get to buy a home, they have a credit history, right? Because they already bought a home. Let's say they have student loans that they paid, or it's like, imagine you are going into, I don't know what grade you are, but you go to your library. Let's think about the bank as the library to borrow books, right? Usually the library lends you a book at the first time you want to borrow. But let's say if you borrow your book, you don't bring your book in time, your book is not well, kept. The library is going to say, I'm sorry, but we don't feel comfortable lending you the books anymore. And same with the banks. If they don't feel comfortable because you don't have enough proof, or if you're not a good borrower, they won't lend you money. And that's their right. Yeah, did that make sense?
So, in terms of borrowing money, like basically the bank should know. So you need like a amount of like history that like shows that you borrowed like money from the bank and and you paid them back on time and like in a good way. Then basically they would know that you're trusty. They will trust you and they will be able to lend the money to you because you have sufficient credit history. But if you have insufficient credit history, then they probably, if it's not enough or like not at all, then they'll probably not be able to trust you, not lend you the money you want or you need.
That's correct. Yes, you understood it right. And usually if you don't have sufficient credit history, the bank is not just going to let you go. It's going to give you tools to help you with the credit history, right? It's going to there's different, we won't go into products here, but there's different credit cards that you can open your first credit card with your parents' permission, and start, building on the credit score when you're ready, when your parents think you're ready. Yeah, so there's tools to grow on that.
So another
Yes.
question, so if you have a credit card like your parents so allowed you to have it, then basically could you like apply for other credit cards as well? Like let's say you wanted to apply for like an Apple card, for example, like would that be possible? And then if you're like building credit, could you also like borrow money from a bank with the parents' permission?
With the parents' permission, yes, you can borrow from the banks as long as this makes sense, right? Because if you borrow too much and you're spending it irresponsibly, the bank is not going to like that, and you're hurting yourself by trying to buy. It's better to borrow on one card to start building your credit history, right? And then have a specific amount. Let's have a $20 payment each month. Let's say your balance is $200 to start with, but you only spend $20 each month because you know for sure you will be able to pay off this $20, and it's a recurring amount. And this is how you earn banks' trust, rather than buying, applying for 3 credit cards and having different balances on them, and just making it hard for yourself to manage that balance, right? So it's better to have 1 or 2 with an spending amount that you can pay off in time. So yeah, that there are tools out there. So what does debit card help you to do? So you avoid debt. By avoiding debt means you don't apply for a credit card, but you just use your own money. It helps you track daily spending. Because the money are coming from your account, sometimes it's easier to track the spending because you have different feelings about the money that you work for rather than the money that the bank just gives to you. So you can track spending on both sides, but it's noted that people track better spending with their own hard money. And then you budget with cash. So some, not very common, but some people like to budget with cash. You either put.
I have a question.
Sure.
So Amelia is actually from but then how do you get the bank to trust you?
Because the bank has records of your spending history. The bank can see the balances that come out of your account, right? Because they give you the credit card. And if they need to, they can look back at the way you spend, how often you make your payments in time, right? They have this history available. So this is how they make the choice, whether the decision, whether you're a good borrower or not very good borrower, a borrower that still has some work to do.
Okay, thank you.
You're welcome, Grace. So going back to budgeting, right? Some people still budget with cash. And when we talk about cash, it's just in the way you use your debit card from your account. So you put money aside either for bills, for your needs, for your wants, and for your wishes, right? Depending on how much you have in your checking account. And then about the credit card, so credit card helps you build this credit score. And you learn about this chart more as you grow up, but being in the green is always a positive thing. Because the green score is a higher score, that means you're more trusted by the bank. You can borrow more, right? You're more responsible. You made your payments in time, right? You didn't miss any interest payments or anything like that. So being in the green is a good thing. Maximize rewards. So with credit cards, you get rewards, which we'll talk about next. And you also get purchase protection. So because you own credit cards, you are protected on your purchases. What does this mean? Imagine you go to the grocery stores, you bought your bananas, your peanut butter, your bread, and you didn't buy butter, but somehow there's a transaction for butter on your credit card. And you say, bank, I went to the grocery store, but I didn't authorize this transaction. And it's on the bank responsibility to talk to the grocery store and say, hey, the client did not authorize this transaction, and the bank credits you this money back, right? If you were charged $4 for butter that you didn't authorize, that you didn't come home with, the bank is going to give you those $4 back into your credit card. So this means you are purchase protection. You are protected. And other than that, credit cards are also protected with a chip to make it harder for people to steal your credit card information. Next, about rewards. So as I mentioned earlier, credit cards have rewards. There's travel credit cards. There's cash rewards credit cards. So with the cash rewards credit card, every time you make a purchase, let's say you get a little bit when you make grocery purchase, a little bit when you put gas in your, when your parents put gas in their cars, you get credits. So you get cash credits that you can then accumulate and deposit back into your credit card. And this helps you, as you spend, this helps you make your payments or just buy something that you want. And then with the debit cards, there's really no rewards. It's always you spend only what you have. So very important question, what happens if your card is lost or stolen? So with the debit card, there's very so I was reading that with the debit card, if you don't report the debit card that is stolen fairly quickly to the bank, and there's a high amount of fraudulent purchases on your debit card, you may be reliable for a good portion of that. But keep in mind that even with that, the Federal Reserve insures 250,000 for each client in their account. So there's a high chance that your purchases are going to be covered by the bank, but it's still, it's prudent to let the bank know quickly, call them and let them know that I lost my debit card so they can block it and issue you a new card. And with the credit card, you have zero liability. You just need to tell the bank, I lost my credit card. If there's any, purchases that, again, you didn't authorize. There's purchases at, I don't know, at the movie theater, the purchase, and you certainly didn't go to the movie theater that night, but you see a movie theater transaction. So that's a fraudulent transaction. So the bank is not going to hold you accountable for that. It's going to credit you those money back. Any questions on this one?
So, if I lost or lost my credit card, like it was stolen, then could I another possible way, could I disable it from the bank or something? So if it was stolen somehow, then the person who stole it wouldn't use my number to buy something from my account.
Yes, Nino, great thinking. Actually, this is possible. For example, I have my Bank of America or First Republic Bank application, right? It's like how we have Google Maps, Uber Eats, and all these banks, all these applications. So I have a capability there whenever I want to lock my card. And whenever I lock my card, even if I don't find, it rarely happens, but if I don't find my card, it may be in a jacket or a bag, I right away lock it until I find it. And if I know that I lost it, I also lock it. So no, or any purchases, if someone tries to make a purchase, it's going to get declined. So yes, we have it on, we have the safety at our hands. We're just disabling it from our bank application.